support for dollar yen, Jane?
Well, I mean, hopefully it is quite soon, but again, it does depend on the whole of the market's move. Now, this is really quite interesting because, of course, again, today we had a downward revision from one of the big forecasters, the World Bank, I think, with respect to world growth. This has been a common theme all year, big forecasters revising down world growth, and yet up until recently, we had the market piling into risky investments, and this, of course, was all about liquidity, all about the anticipation of more liquidity every month from the Fed, and the Bank of Japan, of course, joining in with massive liquidity on April the 4th. And of course, if this is withdrawn, many investors now are all looking to get through the door to try and exit these positions. No one wants to be the last one through. So I think this is what it's all about. Now, with respect to the dollar, well, often the dollar can be a safe haven currency. We've certainly seen over the last month the Swissy and the yen benefit from safe haven demand, the dollar not. And I think perhaps that is because coincident with this movement, we're also having some disappointing US data. It does seem very likely that US growth in Q2 will be softer than Q1, and of course what we had in Q1 was better data from the US, and market participants building up long dollar positions, and now it seems that the market is perhaps too long the dollars to really benefit, or to see the dollar benefiting from this bad news.
Well, what about the euro? I mean, this sounds far-fetched, but what about the euro as a safe haven? Used to the Aussie and some of the other commodities currencies used to be the big diversification trade out of the euro. They're not anymore. This money's going into the euro.
I think that's probably one of the reasons that the euro is relatively buoyant. Again, if we go back really to the end of 2011, we did see a lot of talk about diversification from that period onwards, certainly into the middle of last year. And Aussie was number one on the list. Certainly we knew that lots of central banks were considering buying Aussie in that sort of period. And it does seem that right now they're liquidating those positions. And it seems quite natural that a lot of that money is flowing back into the euro. Another reason why the euro is supported. Will it sustain? Well, maybe not. The euro, we know, is in the eurozone is in recession. That there is going to be probably more bad news on the economic front from the eurozone in the next few months. So, still a vulnerable currency.
Quick final word. What's the thinking around the bank on the Fed now and the exit and what we're going to hear next?
I think probably the market's got a little bit ahead of itself still. I mean, obviously there's the FOMC meeting coming up in the middle of June. I don't think there's going to be any news from the Fed on the paring back. And really with Q2 economic data from the US likely to carry on disappointing, we may not see any paring back till the end of the year, maybe even till the beginning of next year.